This week, I made 21 hours with just two losses, and every single trade was forecasted in advance using a mechanical lead strategy, liquidity imbalance timing, no hype, no kissing. I'll break down every trade entry logic and the two losses I had, so you see exactly how this played out. I will only go through the setups I got throughout the last week. On Monday, Euro USD, we had major inducement here. The major inducement is here. So I was expecting price to go up to this supply, at least this one. So I set my take profit, and according to that, price had different plans. This supply, strange supply held the price, so the price reversed on me, but I managed to take 3 hours. My original TP was this supply, but a supply below it held the price. But I managed to take partials after price hit 1 to 3. I had minor loss before uh, this trade, but hey, it's part of the trading process. On Wednesday, we had here first our demand. This is a clear break of structure. I picked up this demand on 15 minutes. Let me show you. It was actually on 13 minutes because on 15 minutes there's nothing, no imbalance. So I picked this demand on 30 minutes. My thought process was on London session or London open, this demand would hit. We had here build up, inducement into the mitigation, but did not mitigate. So I was expecting this to be another liquidity or smart money trap, but price had different plans. So instead of waiting for this demand, I know it won't hit this demand anymore. I was looking for supply. I had one here. This supply actually made a break of structure here. It was not mitigated here. It's only a smart money trap. Then we had here mitigation. My original take profit was if this demand was hit, but it did not. There was news, so I closed at 3R. Let's go to the next setup. The second loss happened on Friday, Euro USD. I was looking for this demand. We had here a break of structure, strong move. We also have a valid supply. Here's our break of structure. I was expecting the price to bounce from here to the supply. I didn't realize I was part of the liquidity buildup that was going on to mitigate another demand below, so I got induced and lost this trade. I believe it was this demand. Let's go to 15 minutes and see. I just extended to this candle. As you can see, this was build up, build up, then induced into mitigation. Let's go to GBPUSD. I have had most of my wins with GBPUSD. I'm telling you, best bear ever. It doesn't disappoint. I only trade Euro USD and GBP USD, and my favorite is GBP USD. Comment, comment down below what's your favorite bear. I may add it to my watch list. As you can see, it's so easy to follow price around. Now let's look at this demand. I picked it. Why I picked it, and how did I know it may hold? Watch closely. I am revealing something here. At least two important secrets. First, first confluence is, let me turn off this, is that this demand took liquidity from yesterday high, or I mean yesterday low. We had built up inducement, took liquidity, then it is the reason the price was all this bullish. This demand was the reason the price went up. The second confluence or secret I am going to tell you is simply is EDM. Do you see that? The indicator made lower low while the price after mitigating demand is actually making higher low. Let's go to 1 minute see my entries. Oh, first thing, let's talk about this supply. Price was going in order flow, doing lower low, lower high, and then lower low. This was the last candle or the last supply that made a huge move. This is our low break of structure. It made a huge move. So when the price came back to this supply, I knew it might hold. Of course, that's not it. Let me open up the EDM so you can see what I mean. Do you see that? Price made lower low, lower high, while the indicator made higher high, new high. This indicates that price will go down. This is for confluence. Now we can go to 1 minute and see my entries. Let me extend it. This is not a swing high, but it is the last supply that pushed price into mitigation. If I said I would wait for swing high, it would have been here. If I said I would wait for swing high to be broken, it would have taken time. Also, there was a higher chance I would miss it. So instead, I waited for something like this. Break of structure, price came back, there was no imbalance. Price left again, uh, tried to tried to make new higher high. It couldn't. Price came back. I said buy stop order after price came all the way here. I said limit order. I mean the stop loss below this candle. My take profit was this supply, but then again I said to myself, it might hit it up to New York. I don't like to hold all day long, so I just took 10 hours. After hitting the supply, same thing happened here. What do we have for entry? The entries are the simplest. The most important thing is to know where the price is going. The bias is the most important thing. As you can see, I did not pick this candle because I knew I might miss it. So, in order to increase my chances to be tagged in or mitigated, I had to go to 3 minute. We have here 1 minute break of structure or change of character. My point of interest or supply was 3 minute, not 1 minute, because I did not want it to miss this one. My take profit was modest because I knew after 10 a.m. New York time, I knew price would lose its volatility or volume, so I needed to target something like this. Maybe this low. We can consider this one smart money trap, as you can see. So, if this helped you in any way, feel free to like and subscribe. I share more inside my free Telegram, live setups, mindset notes, and chart recaps. The ebook pre-order is open now at a discounted price for a limited time and limited spots. If you want to study this system in full, start there. Links are below.